In this video, we are going to talk about are we headed for a crash? So before starting, please like this video and subscribe to this channel for our future updates. For investors, the start of 2022 has been quite a roller coaster. Worries about inflation and rising interest rates sent stocks tumbling in January, and Russia invading Ukraine in February sparked another wave of volatility for the stock market. All this fear and uncertainty about what's coming next has led to whispers about the potential of another stock market crash, the first since the start of the coronavirus pandemic back in 2020. So, will we see the stock market crash during the rest of 2022? Let's take a look at some of the major factors with a cool, level head to better understand where the market is going. What is a stock market crash? A stock market collapse occurs when the value of stocks drops dramatically as a result of investors dumping their stocks hastily. As a result, the value of equities plummets, prompting other shareholders to sell their holdings in an attempt to mitigate their losses. As a result, people may lose a significant portion of their investment. We look at indices like the Dow Jones Industrial Average, DJIA, the S&P Wink with tongue sticking out 500, and the Nasdaq to see how well the stock market is or isn't doing. You can see why we use the phrase crash if you look at a historical graph of one of these indexes. It's like witnessing a jet go down in flames. Previous stock market crashes, examples from history. The market has had many severe ups and downs throughout history. When we reflect, we're reminded that, while a market meltdown is a difficult experience, it's one that we can and will overcome. The DJIA plunged about 25% in just a few days during the Great Depression of 1929. The economy needed a little more than a decade to recover to pre-depression levels. The post-World War II industry was essential in reviving the economy. The stock market crash of 1987, on Black Monday, the market lost 22.6% of its value. However, it was able to reclaim what it had lost within 2 years. Terrorist attacks in our country triggered a big drop in the stock market on September 11, 2001, but it quickly recovered. The stock market had rebounded to September 10 levels just 1 month later, and had continued to rise through the end of 2001. The Great Recession of 2008 saw the DJIA lose more than half of its value in a very short period of time. But, after a few years, the market was stronger than it had ever been. From 2009 to just before the coronavirus crisis, we were essentially in a bull market, a time of robust economic growth. The coronavirus catastrophe of 2020, the COVID-19 epidemic, precipitated the world's most rapid financial crash in history in March of 2020. Nonetheless, the stock market quickly recovered, and the year ended with new highs. As a result, keep your head up. You've probably already experienced at least 2 big economic downturns and recessions. It's a natural part of life. What causes a stock market crash? A stock market crash is brought on by 2 factors: a sharp decline in stock values and widespread panic. The following is how it works. Stocks are small shares of a corporation that are purchased by investors who profit as the stock's value rises. The stock's worth and price are determined by how well investors feel the company will perform. So, if they believe the company in which they have invested is about to go bankrupt, they sell the stock to get out before the value plummets. The truth is that panic plays just as big a part in a stock market meltdown as the underlying economic difficulties. Let's look at an example from the coronavirus pandemic to see how powerful panic can be. As word of the epidemic spread, grocery and convenience stores all across the world quickly ran out of toilet paper. Was there a scarcity of toilet paper? In a nutshell, yes and no. People panicked because there wasn't a shortage. However, when people went insane and started stockpiling toilet paper, their actions caused a shortage. A stock market crash might be triggered by the same type of panic. When they witness other investors selling their stocks, it makes them concerned. The stock market then begins to fall in value, and more investors begin to sell their holdings. The next thing you know, everyone is selling their stocks and the market is collapsing. Keep an eye on the area below. The idea is that the stock market's value is entirely determined by people's perceptions and predictions about the future. It's no surprise that it feels like a roller coaster ride. How did the coronavirus crash affect the stock market? Let's imagine we have a time machine that can transport us back to March 2020, when the coronavirus was designated a pandemic. Don't worry, we won't be there long. The world economy was in disarray while people were binge-watching Tiger King or flooding stores to buy toilet paper. Supply chains came to a screeching halt. Overnight, entire industries shut down. And then there was a massive drop in the stock market. The stock market took us all for a ride in the early days of the pandemic. Global markets, not just in the United States, have taken a massive dive, initiating a short-term bear market, in which the stock market drops by at least 20%, and an economic recession in the coming months. If you were looking at your 401k during those days, you were probably worried as you watched your savings vanish. However, after a precipitous drop in March, the market began to steadily rebound. The stock market had regained all of its lost ground, and then some by the time the New Year's Eve ball dropped on December 31, 2020. Did you hear what I said? In 2020, all of the key indices increased. The S&P wink with tongue sticking out 500 rose 15.6%. The Nasdaq increased by 43.8%. The Dow Jones Industrial Average increased by 6.5%. Even the enormous, scary coronavirus crash didn't knock us out for long, as we can see in retrospect. Indeed, experts now claim that the recession caused by the coronavirus outbreak was the shortest on record, lasting only 2 months. Will the stock market crash in 2022? Let's get one thing straight. No one can perfectly predict whether the stock market is going to crash during the rest of 2022. Just think back to everything that has happened these past few years. You can't make this stuff up. So, will the stock market crash in 2022? All we can do is look at the things that will influence the market and your investments throughout the rest of the year. Let's dig into the specifics and where we are now. Reasons to feel cautious about the stock market in 2022. High inflation. As a result of all those stimulus checks and supply chain concerns, we've witnessed a big increase in the price of, well, everything, especially in grocery shops and at the gas pump, leading to investor caution and consumer spending cuts. Interest rates are rising. In an effort to combat inflation, the Federal Reserve began hiking interest rates in early 2022, and more rate hikes could be on the way shortly. While this may help to curb inflation, it may also lead to another recession in the United States. Tensions in Europe. Russia's invasion of Ukraine sent shockwaves around the world, and it may give investors indigestion in the coming months. However, if history is any guide, large geopolitical or historical events usually result in the stock market recovering and rising a year later. So hold on tight. Reasons to feel optimistic about the stock market in 2022. COVID-19 is fading. As the coronavirus crisis subsided, putting the Delta and Omicron varieties behind us, we've observed an increase in optimism, movement, and spending. Our country has a lot of pent-up energy, and people are itching to get out and about. Jobless is decreasing. In March 2022, the unemployment rate fell to 3.6%, the lowest level since February 2020, just before the epidemic began to wreak havoc on the American economy. This means that more people are looking for employment and finding them. Growing industries include, during the epidemic, several industries, tech, e-commerce, and biotech, made huge gains and will continue to do so, giving investors cause to be optimistic. We can spend all day crunching figures and making forecasts, but at the end of the day, no one knows what will happen for the remainder of 2022. So let us be the type of people who are ready for whatever the future holds. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.